Have you ever wondered how traders decide when to buy or sell a crypto coin without guessing? In today's video, how to identify buy and sell pressure in spot trading using market depth. I will show you a simple educational method traders use to understand market behavior, even if you are a complete beginner. Before we continue, get a quick disclaimer. This video is for educational purposes only. I am not giving financial advice and I'm not promising profits. Cryptocurrency trading involves risk and you should always do your own research and trade responsibly. Many beginners lose money in crypto trading not because trading is bad, but because they don't know when to buy or sell. Most people buy randomly because a coin is hot. They sell out of fears when price drops and they don't understand market pressure. The big question now is, how will you know when buyers or sellers are in control before making a decision? So that is what I'm going to break down today. First, what is spot trading? Spot trading means buying a coin and own it directly. It's simple. You buy the coin and you bear the owner directly. First, you buy, let's say, Bitcoin with USDT. The Bitcoin stays in your wallet. Then you wait and sell it later when the price change. This is different from futures trading, which involves leverage and high risk. Should in case, why give you a tutorial and make mention of liquidity? Many people may not know this. What is liquidity? Liquidity means how easy to buy or sell a coin without delay. Coins with high liquidity, first, it executes orders faster. Secondly, it have less price manipulation. Third, they are safer for beginners. So that is why we are going to focus on high volume coins, not random tokens. No. Now, let's go practical. Step number 1, open your Binance app. Here is the homepage interface. You will see different sections here. You see hot, alpha, new, gainers, losers, and so on. So for learning purposes, we are going to focus on hot coins section because they are actively traded, they have high volume, and their order feels faster. Although this does not mean they will go up or down. It simply means they are active. So when selected, we have to go to step number 2. So before we move to step number 2, we have to select a coin. For instance, let me pick either this or this. Okay, let me pick this BTC anyways. Now let's move to step number 2. Step number 2 is understanding the chart indicators. So this is the chart. On the chart now, the first thing to do is to turn on the Bollinger bands. How will you do that? Our indicators are here, this place. So click on Boll. D-B-O-L-L indicates Bollinger bands. So click on it. Good. We can all see the difference. Look at these lines. Are you seeing it? Are you seeing them? Now let me give you simple explanation on Bollinger bands. Bollinger bands are lines that help shows when price is calm and when price may become more active. So when the band squeeze, that is upper band and lower band, when they squeeze, just like how you are seeing it here, you see here it's wider here, but this place it's squeezed. So when it squeezed like this, or when it comes closer together, it means the market is quiet and preparing for a possible move, either up or down. Although this does not predict direction, it only signals possible volatility. So let's go and check now. Another thing is this. If you check now, you see that anytime price touches the upper Bollinger band, we anticipate that the price will come down, which means it has been overbought and tend to move down. And when it touches the lower Bollinger band, we anticipate that the price will reverse back up, go bullish, because it indicates that it has been oversold. So if you check very well, you'll be seeing samples like that here and here, here and here, including here and here, and so on like that. Then check the time frame. You can see the time frame. So presently now I put it 4 hours. Now the next confusion we may have, just like what we are seeing here now, we don't know the next direction. We want more confirmation because look at this now. The market price drop here. The market has been consolidating here for long and upper and lower Bollinger band wider here. Then the market drop. When drop, we know for sure that market will still consolidate, like to rest before taking the next move. Now, the next move now we are not certain about it yet, and we need to go and do another confirmation. That is, after the consolidation, will the market go up or further down. We want to be sure about it. And this will lead us to our step 3, which is confirmation of direction using CoinMarketCap. So go to coinmarketcap.com. Then from there, just click on this top. Then look for the coin here, like this is Bitcoin. Or if you cannot see the coin here, just come to this search bar. Then search for the coin. So as for me, I will click on BTC here. Then from here now, I'm going to click on markets. So from markets now, just pay close attention to this. Under Binance, that is the exchange you are trying to use for this. It's not compulsory to be Binance, but I am trading under Binance right now. So I will focus on Binance exchange here. So, and second thing is the pair. So this is BTC USDT, which is okay for me, not BTC FDUSD. BTC USDT. The next thing very important which make us to come here is this. Now be tracing it. Now you will get to this +2% and -2% depth. This is where we are headed to. And this is our reading for Binance. Now, I want to educate you about this +2% and -2% depth. This aspect of +2 and -2% depth is highly controversial in crypto trading. So, give me your full attention. On CoinMarketCap, -2 and +2% depth showing how much buying and selling liquidity exists within 2% of the current market price. So think of it as how strong is the market close to the current price. So let's break it down again. Let's assume this level is the current market price, and we all know that markets have to be going up, and when it's going up it will be increasing. So when it's increasing, going up, that is your +2. And you know, in spot trading, as the market is going up, that is spot trading. We buy when it's coming down, when it's going up we sell. So who is going to sell when it's going up? Is seller. Is seller that stay there in +2. You know, this is market price. So anything above this market price is +2 we are talking about here. +2 above the current price. So who want to sell +2 above the current price? They are sellers. Are you following me now? So anytime you see +2, they are sellers that have set the limit that, okay, if this current price can just increase by just 2%, sell for me. They are there, they set the limit there. And that is the standard CoinMarketCap used to analyze this. Currently, how many people set to sell when the current price increased by just 2%? Are you following now? That is sellers. Sellers use +2%. They are the one that set the target. But what of -2? -2% means buyers that want to buy. That is, if this current market price could just reduce by just 2%, buy for me. They set it in the limit buy. So who are the people operating here? They are buyers. So when you see +2%, they are what? Who are the people staying there? They are sellers that want to sell to make their profit, 2% profit. And when you see -2%, -2, that is -2% below the current market price. Who are the people always target like -2% below the current market price? They are buyers. Oh, let me wait more. Maybe market will come down. They will set the limit. Buy for me if it could decrease by 2%. They set it, they buy. So henceforth, never get confused with +2 and -2% depth analysis. Even me myself, I got confused before. Not until now. I said, okay, let me carry you guys along. No matter what anybody tell you, don't get confused. This is just the real truth. So -2% shows the total value of the buy orders. People that want to buy, it will show you. And here is it. You see that they put this price there, 16,335,000 whatever. That the first one here is for +2. Why the second one? You see that they put demarcation here. The second one at the right side is -2% depth, which is for people that want to buy. Which means this -2% depth is for buyers. They want to buy it if the current price could decrease by just 2%. They are there, and look at the total volume of the amount they're ready to buy. Why? When you see +2%, you know those are the people that are waiting for the current price to increase, to level up, so that they can sell and make profits. Are you following me now? So +2 is for sellers, while -2 is for buyers. Now let's compare. The situation now is this: markets always favor the higher value. Now look at the both value. Which one is high? Presently, the highest one is this. This one is 21 million plus. Why this one is 16 million plus? So there is tendency that market will favor this. They will not want to ignore this amount of money for this little money. So which means market will favor -2% debt, which is what? People that are willing to buy if market could decrease its current price by just 2%. Look at the gap, 16 million to 21 million. The gap is wide. The gap is wide. Let's go and check the current situation now. Now look at it. Look at this current situation. You see that market is even coming down. Let me put the time frame 1 hour. Yeah, it's loading. Good. Now look at it. You see, market is coming down. And with what we are seeing here, it proves that there is tendency that market will still come down more. So we are getting proof from two different sources now. So let me put it 15 minutes. You see 15 minutes. You see, it's still coming down now. Just down now. But it should be in case. When you check, you see that there is no much gap within this +2 value and -2% value. No much gap here. Here now you see much gap. 16 million to 21 million is a larger gap difference. But let me look at some. There are some that you may not see much gap in between. Just like this one now. If you are to trade this in OKX now, look at it. 1,090,000 plus 1,721,000. Even from here also, -2% debt also have more value than +2. But it should be case you see that it's just some little gap. There is no much difference in the values. That is not giving you direction yet. No direction. Just leave it. Go and look for other confirmation. You can use other technical indicators to know what to do. So when you now know the next thing to do, then put everything together. Use Bollinger Band. Use your result from CoinMarketCap +2 and -2% debt. Take it, use everything, combine them together, use it to take decision. That is not all. You can also include other technical analysis like RSI, MACD. They are all there. Make use of this. You can also use candlestick pattern. There are many tools just for you to take decision. Using only one indicator is not enough for you to take decision. No, it doesn't work that way. You have to make confirmation from different indicators just to know that you are taking the right decision. So if you think you get value from this content, please make sure you give me a like on this video. If you have questions, drop it for me in the comment section and I will respond to that as soon as possible. You want one-on-one tutorial on crypto trading, meme coin trading, futures trading, and many more? I am available for you. You can go join Sheyi Dairo Crypto Academy. How will you connect with me or join my class? Check the pinned comment. You will see link to connect with me or enroll for Sheyi Dairo Crypto Academy. Till next time, I love you guys. See you guys in my next videos.